it all with Robert Schiffman from Bloomberg Intelligence. We knew they had to finance the extraordinary amounts of AI capital expenditure. Is there enough demand to support these mega bond sales?
Yeah, I think, listen, let's start from the beginning. Do they actually need any money? My answer is no. I think they're borrowing money because they can, because it's super cheap, and that there's a concept that demand for not just AI, but bonds are so insatiable that they can go out and do a 100-year maturity. So yeah, there's tons of demand. If Oracle is able to build a $130 billion book, yes, Google can build whatever book it wants.
This is why going back to basics is probably a good place to start. I agree with you. People would say, well, why is debt a good idea? You know, they look at some of the Mag 7 names and the cash on their balance sheet and say, you know, why is that a useful mechanism for them?
Yeah, well, this is what they taught me in math camp. The weighted average cost of debt capital for all these names, whether it's Meta, Alphabet, Microsoft, Apple, Amazon, is effectively zero. You know, why do you have AA and AAA balance sheets if you're not going to use them? I think this is extraordinarily visionary. You know, these companies have been prepping for years for greater investment opportunities, and now they finally see it. I think it's just such a bullish sign for this market. And from, again, the bondholder perspective, this is not equity holders being wary about multiples. Bondholders, I don't think, are going to be able to get enough, and they're going to be able to do it along every single part of the curve. And like you said, this isn't just going to be dollars. They're going to the Swiss franc market, the pound market. I wouldn't be shocked if they went back to the euro market or even to issue yen. I think there's going to be demand all over the globe for high-quality Mount Rushmore-style credits like this.
I want to go to whatever math camp you were going to, where you were talking about Swiss yen, sterling-denominated corporate debt. But look, the demand's there. We've seen in other parts of the AI sector, Infineon in Europe tapping the market. It's a chip maker. We've seen IBM come to the market. There's $400 billion that could get done in corporate bonds, just the investment grade sector alone, JP Morgan forecast for this year. How do you think steady it will be for the year? Or do you think we're going to be front-loading this? Are we awaiting Amazon to come straight out the gates, given you've just put out a note about their really strong fundamentals?
Yeah, listen, I think this is the tip of the iceberg. I actually think Bloomberg News is underestimating how much hyperscaler spending is going to be this year. They put out a number of $650 billion just for this year alone.
I think that's just the four, right?
I think it's going to be closer to $750 when you include names like Oracle and CoreWeave. And if you think about cumulatively how much spending has gone up, in the beginning of last year, we estimated 2025 through 2030, we're going to see $2 trillion of cumulative spending. We brought that number to $3 trillion in the middle of the year, and now we're up above $4 trillion. So these numbers are astronomical. What do you do on the back end of that? You're going to see a lot of bond deals. Why not borrow when your cost of capital is so low? So I think you're going to see Amazon, you're going to see Microsoft, and even though Apple is not in this hyperscaler game, you're going to see them come back as well.
Robert Schiffman on the corporate credit watch, math camp, Bloomberg Intelligence CV, love it.